things look good at the moment. Where there is a fly in the ointment are at two levels. International growth prospects currently now look threatened by the United States and its trade policy. The reaction of Europe is going to be quite interesting. But what that means for Nigeria is that if trade does suffer, oil demand will suffer. How badly it will do remains to be seen. But the usual thing that, as policy analysts for Nigeria, we hope that even if trade does suffer, a little political miscalculation in the Middle East can usually be guaranteed to take oil prices back to where we'd like. Beyond that, where the headwinds internationally gather is what we've always known. The unwinding of quantitative easing and the forward guidance by the US Fed simply means we're expecting at least one, probably two rate rises in the course of this year. Now, that comes a bit of bad news. And the reason is not very difficult to understand. Rate rises make Nigeria's financial markets and their returns relatively unattractive. Relatively unattractive. And therefore, you would anyway expect to see at least a slowdown, potentially an outflow. Headwind number two is actually domestic. And as far as investors are concerned, that's the elections. I'm an economist, I'm not a political scientist. And so whatever I say about politics, you probably should discount very carefully. Fortunately, the Honorable Minister is here. Sure, his thoughts on these matters might be more fun. However, why does politics become a headwind potentially? It's not a Nigeria-specific issue. It's globally. Anytime, anywhere in the world where there is uncertainty, and that uncertainty arises once you have a contest, then you should expect international capital, indeed local capital, that has the opportunity to sit on the sidelines. And so some of us have been expecting that any which way it cuts, foreign portfolio investment into Nigeria will at the very least slow down and potentially actually outflows. And so when we see what happened in the last couple of days, we're not that surprised. But the point, however, to be made very clear, Nigeria does need credible elections, transparent. I'm not going to say anything beyond that. And I think it's important to point out that we're all witness to what happened to Kenya. Nobody would have thought that the Kenyan elections are going to go the way they eventually went. And so, challenge on that score. Yes, GDP is rising, but there are a series of concerns. And I highlight those concerns, not because I think they threaten the short term, but in my view, they define the challenges that we must face post-election. What are these issues? Nigeria's 46 sectors, believe it or not, 6 of them are responsible for about 3/4 of GDP. And the 6 are pretty simple. Agriculture is the largest, somewhere around about 22%. Distribution, which is trading, is the second largest, which is somewhere around about 17%. Then you've got 3 sectors kind of running between 9.5%. And there you have manufacturing, you have telecoms, and you have, so manufacturing, you've got telecoms, you've got oil and gas. But guess what? If you look at the numbers back historically, currently, Nigeria's recovery is being driven from the oil sector. The recovery of oil production is what has taken us to where we currently are. But if you ignore 2018, Q1, and you look further back, agriculture has actually been a fundamental driver of Nigeria's economic growth. However, celebrate that as we currently do, there's a challenge to be wary of. And that challenge is this. In 2010, approximately 30% of Nigeria's labor force was employed in agriculture. By Q1 2018, 48.5% Nigeria's labor force, according to the Bureau of Stats, is hired in agriculture. Now, even though agriculture is increasing in size, continuing to grow, the rate at which it is growing is nowhere near sufficient to absorb the kind of labor inflows that it is seeing. And therefore, one of the big challenges that post-election we face is a very simple one. Productivity in agriculture is dropping. When you adjust those numbers, you're looking at a productivity decline of almost 20%. Pretty much all sectors of the economy have hemorrhaged labor in favor of agriculture. And standard economics tells you that's not what should happen. Indeed, standard economics is very clear. You take labor out of agriculture and take it into manufacturing. But guess what? Nigeria's manufacturing is not growing nearly as robustly and consistently as it needs to. Prior to 2017, latter part of 2017, we were very clear why manufacturing was in trouble. FX, low oil prices, production of oil. However, since then, oil prices have improved. Oil production numbers have steadied. And so the question then remains, so why is manufacturing not being able to grow as quickly as it needs to? And I think there are two big challenges that we must address. The first is the challenge around infrastructure. Because I was stunned the other day to be told that, well, how much it costs to get you a container from Europe to Nigeria is probably about 20% of what it costs you to move it from the ports in Nigeria to northern Nigeria. Now, these are challenges around infrastructure. The good part of it, though, the good part of this piece is that you begin to look at the legislation that's running through the Nigerian National Assembly, and you're seeing legislation around the National Road Bill, around infrastructure, which speak to the government's willingness to vacate infrastructure and allow private sector participation. I've always been clear that Nigeria faces two fundamental challenges, or two fundamental questions it must answer. The first is, what is going to be the role of private capital in economic growth? And let me be very clear about that. Nigeria is capital deficient. I repeat that, Nigeria is capital deficient. And therefore, we need to be able to mobilize capital, local, international, into sectors such as infrastructure. The second question that I am clear in my mind that Nigeria must also answer, again post-election, has got to be, what is going to be the role of the price mechanism in resource allocation? What's going to be the role of price mechanism in resource allocation? Because again, prices allow for discovery. Yes, markets are not perfect. Yes, markets fail, but that's where the regulatory capacity of the government kicks in. And so for me, these two questions go to the heart of some of the weaknesses that we still see in Nigeria's economic landscape. What's going to drive the outlook? I'm clear in my mind that three things will drive the outlook for Nigeria. The first, Nigeria remains an oil story. Whatever happens to oil prices, whatever happens to oil quantities, will be very, very important as far as Nigeria is concerned going forward. However, on that score, at least, we have a decent basis for being hopeful. The second driver of the outlook for Nigeria is going to be what happens to the elections. As of today, the usual noises are being made. I've traveled quite a bit around the world, and one of my enduring observations is that everywhere in the world, as elections approach, the decibels rise. And so it's nothing different in Nigeria. However, that said, it's important that Nigeria must keep in this electoral process confidence local and international investors. Have no doubt, some investors will leave simply because of the uncertainty that accompanies electoral contests. It's nothing that we can do much about. The key question is going to be, how quickly do they come back? The third driver of the outlook is going to be what happens to policy. What happens to domestic policy in the run-up to the end of the year? For some of us, those who are particularly cynical, take the view that we shall abandon all governance by July. Well, seems quite reasonable. After all, if you're going to win an electoral contest at the beginning of next year, then you better begin to prepare.